If you're starting a business in California, then I'm going to walk you through the exact 7-step process to launch your LLC in a single afternoon without getting slapped across the face with government paperwork or making a bunch of expensive mistakes. By the end, you'll know exactly what to do and, more importantly, how to do it. So let's get started. The first thing that you need to do is to choose your company name. So head over to the California Secretary of State's website and use their free business search. I'm going to leave a link down below for that. It's super easy to use, but there are a couple things to keep in mind before you lock in your name. Number one is that California lists both corporations and LLCs together, and their naming rules are different. That means that you can have Regal Roofers Inc. and Regal Roofers LLC both active at the same time, which is rare but perfectly legal. Plus, if your name is taken, then the good news is that California is actually more flexible than most other states. So you could just change it slightly. Like if Regal Roofers LLC is taken, then you can just say Regal Roofer with no S, and it'll usually go right through. Now, if you see that the name that you want is tied to a company that is suspended or terminated, then that means that you are completely free to use it. But here's where most people get tripped up and how you can save yourself a week of frustration. So when you apply for your EIN, the IRS might still think that the suspended or terminated business still exists. So in that case, you do need to go and verify that you are the new owner, which usually takes 2 to 4 weeks. So my advice is only go through that process if the name is really important to you. Otherwise, just pick something that's available and keep moving. And don't forget that your LLC name needs to end with something like LLC or L.L.C. or a similar designation. My recommendation is to just keep it simple and use LLC. It's nice and short, it's easy to write, and it's really good for the banks. Now, if you want to make this whole process a whole lot easier without messing with a bunch of government documents, then I would suggest using something like Taylor Brands. It's basically like the TurboTax of the LLC world. So I've used them personally, and they've been nothing but amazing. They make everything really simple, really smooth. So I'm going to leave their link down in the description below for you to go and check that out. Now, once you've got your name, the next thing that you need is a registered agent, which is someone who accepts legal and state documents on behalf of your business. So you can be your own agent, you can have a friend do it, or you can use a professional service. The only rule is that they need a California address and they must be available during business hours. Now, my suggestion is, if you can, to be your own registered agent, because you're going to save a bit of money that way. The only problem is that you're going to be required to list your information online, making it easily accessible to just about anybody in the world, which often results in a lot of junk mail that ends up just trying to scare you into paying a bunch of money. And it can be quite difficult figuring out what is and is not legit. So a professional agent is going to filter all of that noise out, and it's only going to forward the real and important documents to you. Taylor Brands also provides this service, so if you do end up using them, then they'll take care of all of that automatically. Okay, so now step number 3 is filing your articles of organization. This is basically your company's birth certificate, the document that officially creates your business in California. You're going to file it online through the Secretary of State's website, which again, the link is going to be down in the description below, and it costs $70 plus a $6 certified copy fee. Definitely pay for the certified copy fee because most banks are going to require it. Once that document is filed, your company is officially born in the state of California, so congratulations. But now comes the most important step, your operating agreement. It's not required in California, but it is what gives your business real legal protection. Just think of it as your company's internal rule book. It spells out how your company actually works, who owns what, who makes decisions, how profits get divided, what happens if there's a dispute, and how the business stays compliant with California law. Without it, you and your business are legally seen as the same thing, meaning if somebody sues your company, they could go after your personal assets. For example, if you run, let's say, a food truck and your hot dogs make somebody sick, then the court could hold you personally responsible unless your operating agreement clearly separates you from the business. It also prevents partner conflicts before they happen. So say that you and your friend start a clothing brand, and maybe one person invests more, and so they get 70% of the profits. or you both agree that major decisions require both parties to vote on it. The operating agreement spells all of that out clearly so that you don't have to end up fighting later on down the road. It even covers things like what happens if one of you leaves or sells your share. Long story short, don't skip this. And unless you really know what you're doing, just have Taylor Brands or another professional set it up for you. Step 5 is getting your EIN number. That is your employer identification number from the IRS. Think of this as your business's social security number. Without it, you can't open a bank account, hire employees, or file taxes. Walk into a bank like Chase or Wells Fargo and tell them that you're opening a business account, and they are going to immediately ask for your EIN. The good news is that it's free and it's easy to get on the IRS website, which I'm going to link down below. But the tricky part is choosing how your LLC will be taxed. When you fill out the form, the IRS is going to ask if you want to be taxed as a disregarded entity, partnership, C corporation, or S corporation. And each choice affects how much tax you pay and how you report income. For example, a one-person LLC is usually a disregarded entity, meaning profits pass straight through to your personal taxes, while a multi-member LLC might choose partnership. If you pick wrong and later file differently, then the IRS can reject your return and you're going to have to redo a whole bunch of forms. So definitely double check with a professional before you submit this. Now, step number 6 catches a lot of new business owners off guard, and skipping it can literally cost you hundreds per day in fines later. And that is filing your FinCEN BOI report, which stands for Beneficial Ownership Information Report. In plain English, it's a short form that tells the government who really owns your business, mainly to prevent people from hiding illegal money through fake companies. As of right now, this report is optional because there is an ongoing legal appeal, but it's still highly recommended that you file it anyway, because if the government later decides to make it mandatory and you don't have it done, then you could face hefty fines up to $500 a day until you do fix it. And the form only takes about 10 minutes. All you do is just list your business name, your address, and the people who actually own or control the company. The only tricky part is that not every owner needs to be listed. So if you're married and you co-own your business, both spouses might not need to be included depending on how your business is set up. Again, a quick chat with the professionals can save you a big headache on down the road. Now, the final step is your annual report. In California, LLCs have to file this every other year, but your first one is due 90 days after your company is formed. It costs $20 plus $6 for a certified copy, and it's filed through the same Secretary of State website. Again, definitely get the certified copy because banks are going to often ask for that. Now, once you've completed all 7 steps, your company is officially up and running in California. One last pro tip, call your city office, not the state, and ask if you need any special business licenses or permits. These depend on what kind of business you run and where it's located. For example, if you're opening a coffee shop in Los Angeles, then you might need a health permit and a city business license. But if you're running an online business from home in a smaller town, then you might not need anything extra at all. Every city has its own rules, so it's always smart to just double check. Hopefully this video helped make the process easier to understand, and if you don't want to handle all this paperwork yourself, then I do highly recommend Taylor Brands. They make it really simple and save you hours of hassle and fumbling around with a bunch of government paperwork. The link for them is going to be down in the description and pinned comment below. And hey, if this video helped, then give it a like. It really helps with the channel, and of course subscribe for more straightforward guides just like this one. Thank you for watching, and I will see you in the next one. Peace.